Hi there. Hey, welcome back, everybody. It's so great to be back and feeling okay. And I'm glad that you're here with me, even if you're here live in the room or if you're one of the many people who listen to the recordings later in the day. All the recordings are archived. If you don't understand the situation that's happening in the U.S. Forex industry with FXCM and Gain Capital, please refer to the earlier session from today. It's in the library. It's been saved for you, so please check it out. Really important stuff to understand. And of course, this is your room, so if you do have any questions or if there's a particular currency pair that you would like me to take a look at, please feel free. We encourage interaction, and so you're welcome to add anything you wish. I am going to start off with copper. Look at this chart. Well, this is an ascending triangle, correct? Look at that. Ascending triangle. And that means the bulls are getting stronger, right? The bulls are buying at higher and higher and higher prices. But the bears are just trying to hang on to this area here. They sold it and they sold it again. But big breakout. And this is a continuation pattern. Continuation of what, you may ask? Well, in technical analysis, I'll say it again. Everything is defined by what precedes it. And here, what precedes this ascending triangle is a very strong rally in copper. Now, that's the small picture. Copper has come back to life. And it's not a coincidence that this big candle on Friday comes after a very encouraging report out of China on Thursday evening. China reported a trade balance, right? Big jump in exports and a big increase in China's trade balance. China just might be improving. Now, when the price of copper goes up, we know China's the biggest buyer of copper. So it's entirely possible that some of this is being driven by buying from China. But that's not the only factor that moves prices. We know there are some mines that are on strike. We know that there are some supply issues because of things like that strike, that mining strike. But one of the great things about this is a futures chart. See that symbol at HG? This means I can show you the volume. Whereas in Forex, we don't really know the volume. But in futures, I can show you. And watch what happens when we look at the volume. Okay, this is the breakout candle. This is Friday. Today we're seeing some follow through, but the candle that matters most is Friday. And look at the volume on Friday. Big increase in volume. Highest volume day of the year so far in copper. And highest volume day, I think you'd have to go back to late November, early December. So highest volume in a couple of months. Not a coincidence, folks. Good news out of China. Strong move in copper. Why is China rebounding? What was really encouraging about this report was a nice increase in exports. And who's buying them? The United States, Europe, the UK, and the rest of the world. If the rest of the world is buying more stuff from China, what does that tell you about the rest of the world? Could be improving. And therefore China's improving. This is why copper is so important. Copper is not just a commodity, it's an indicator. In fact, there are a lot of people in the industry who call copper, they refer to it as, what's the nickname for copper? Dr. Copper. Why do they call it Dr. Copper? Because you can tell a lot about the health of the global economy in general and China's economy in particular when copper is strong, the health is good. And when copper is weak, the health is bad. This is because copper is an industrial metal. If you think about it, anytime you put up a building, you have to wire it with copper. So maybe there's going to be a lot more construction. It's something to think about. Now, I'm showing you just the last few months of this chart. I'm going to switch this to a weekly chart. Show you the magic here. You see, when you look at it from this angle, people are going to say copper has already come up too much. I can't buy copper, or I can't buy anything based on copper because it's already up. Well, how about now? Does copper still have room to run? Absolutely. Absolutely, yes. Now, a little bit of short-term history. Price of copper crashes along with the price of pretty much everything in 2008 as the entire global economy is in a recession, the Great Recession. Then the price of copper triples from 1.5 to 4.5. Point A is 1.5. Point B is 4.5. Why does the price of copper triple in a 2-year period from 2009 to 2011? Well, somebody's buying a lot of copper because somebody's putting up a lot of buildings. And you can imagine who that is. China begins a massive construction project. They start building cities, modern cities all over China. Many of those cities are still empty. They're referred to as the ghost cities. And do yourself a favor, if you're not familiar with the ghost cities of China, go to Google it. Google it. Go to YouTube. And you can, it's an amazing thing. You have cities the size of, major American cities, major European cities, except they're empty. Nobody lives there. And so China figured out maybe we made a mistake. They needed a lot of copper to wire all those buildings because they were putting up entire cities. At some point, they figure out, I think we made a mistake. And down it goes. Now, I can also demonstrate copper using JJC. There's JJC. It's the same chart, right? The reason why I'm doing that, I want you to compare it to a currency. Whoops. We're going to insert the symbol FXA so I can show you an apples-to-apples comparison of copper on the top and the Australian dollar on the bottom. If copper is breaking out, we need to look at the Australian dollar. That's pretty obvious, right? But I'm telling you that the relationship between copper and the Australian dollar is stronger than the relationship of gold to the Australian dollar. Most people, in their mind, they think Australian dollar equals gold. And frankly, that was true. But this is truer. The relationship between copper and Aussie is stronger than the relationship between gold and Aussie. Why? Well, people get pretty emotional about gold. And when people get emotional, bubbles can form. But I've never really seen anybody get emotional about copper. And so copper, I think, is truer in terms of the relationship to the Aussie and a much better indicator of global economic health, obviously, than gold. Fascinating thought. If I change it to gold versus Aussie, what happens? It's still a pretty strong relationship, but not as clean. Not as clean as copper. So, we should be looking at Australian dollar, correct? All right, we're going to look at Australian dollar. But before I do, I want to show you something else. It's not just bullish for Aussie. It's bullish for global stocks. I'm going to show you a couple of charts. In one moment. Let me just pull this up. Watch this. Do you see this chart? This is copper and the S&P 500. Now, you might recall both of these crashed in 2008, especially the S&P 500. But look at the relationship. Do you see a relationship between copper and the S&P 500? Which could be used as a proxy for the global stock market. What do you see? Not only are they running together, copper actually finds the bottom first. And the stock market finds it 2 months later. Copper bottomed out at the beginning of 2009. Stocks didn't bottom out until March of 2009. And now, that's pretty impressive, right? Copper actually led stocks higher. Let me show you a similar situation very recently. This is just a few months ago. The stock market starts a huge rally maybe 2 days before the presidential election. Copper begins a huge rally 2 weeks before the presidential election. See the difference? Copper takes off around October 24th. The stock market follows around November 4th. So in both instances, both the recent rally in stocks and the rally in stocks that occurred, huge bull market, and one of the biggest bull markets in history, both of them were led by copper. So if copper is breaking out right now, there's JJC. That's copper. That's an ETF, by the way. JJC is something you could buy if you wanted copper, but you didn't want to trade futures. Maybe you want to buy it in your stock trading account. You would use JJC. If you wanted to buy it in a futures account, which is probably preferable, you would use HG. But same result, big breakout happening here. Big breakout is occurring. So let's go to the Aussie. You're going to say that Aussie's already had a tremendous run, just like copper's already had a tremendous run. It's easy to say that Aussie's already had a tremendous run. But if we back it up to a weekly chart, Aussie has a lot of room to run. The problem is this. Look at all these wicks. This is a huge problem. This is where Aussie doesn't have just a little bit of trouble, but a tremendous amount of trouble with the area between 77 and 78. But the breakout in copper is giving me a little more confidence that it just might be able to make it work. But Aussie would be a very tough buy right here. We know that people like Carlos, frequent guest in the room, bought Aussie much lower. And congratulations, Carlos. This is the area that I'm concerned about. It's like a graveyard for Australian dollar rallies, you could say. But if we get through there, is there upside? Better believe it. Tons of upside. Potential. Imagine this. I mean, that's far away, but there's not a lot of resistance in between, because the price actually moved. This is going back, I know. It's going back a few years, but the price actually moved pretty quickly from 94 cents versus the US dollar down to 70 cents versus the US dollar. It all happened in less than a year. That's a big, big area. That's 1,800 pips away from the current area. There's a lot of profit potential here. And you know what? If the global economy is truly recovering, it could happen. It will not happen quickly, but it could happen. It could be a great trade for somebody who has a lot of patience when it comes to taking profit, but very little patience when it comes to taking a loss. You may have to enter that trade multiple times, but I think especially if you get through, if Aussie can make it through this yellow area, the sky's the limit. Could go to 94. I mean, yeah, there's resistance here. There's some resistance here. This is not major resistance. This is not major resistance. 88 is the first cluster of resistance that I would be worried about at all. And 94 is really, truly resistance. But first you have to get through this group here. This is the hard part. So you could buy dips, right? Buying dips could do the trick. You don't want to buy right into this yellow area here. Let's go to a daily. And we see a nice trend here. And whenever I see a nice trend like this, well, if you've been here for any length of time, you know what I'm going to do. I'm going to see if there's any type of support on the moving averages. Look at that. Look at it. Gaze upon it. This is tremendous support on the moving average. Now I know where to buy Aussie. Not only is this, let me look at this. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 candles just since January 25th, bouncing off of the 10-day. Now, here's what happens a lot of times. Sometimes you find it and it looks so great, and then that's the end of it. As soon as you buy it, it's over. Sometimes it just keeps going and going. That's why we use stops, gang. Never risk more than 2% of your account on any trade, and you will not regret that. Will it limit your gains as well as your losses? Yes. But it is the proper way to trade to make money over the long term. Anything else is gambling. Trying to make a lot of money in the short term is gambling. You can't place a huge size position here without taking a huge sized risk. But folks, I think the chart now. Not only is that, I even draw support. Some buying it when it comes down here. Our moving average is pretty close to 76 also. So if I were looking to buy this today, I'd be looking at 76.30 or maybe a little bit lower. My 10-day exponential moving average is currently 76.30. However, 76.30 will not be the moving average. If this drops today, it'll push the moving average a little bit lower. Maybe 76. We don't want to just throw an order in there at 76.30 and leave it there. That's dangerous. Why? Well, we want to enter right on the moving average, and moving averages, they go, if the price goes up, it'll pull the moving average higher. If the price comes down, the opposite happens. So if the price comes down, that's what we're looking at. Maybe 76.25. Stop would definitely be under 76, right? You'd really have to bust through that moving average to get them, and through this little support down here too, this line. You have to break them both. Excuse me. Stock market just opened in the U.S. You'd have to break both of those support to be stopped out. One of the ways I like to place a stop on trades such as these, I like to use half of the ATR. So, average true range, we'll put it on the chart. This currency pair moves 64 a day. That would put my stop just under 76, because right now the moving average is 76.30. Half of 64 is 32. This would put my stop really just barely under 76. Now, quite frankly, I've got to go a little bit wider than that. Putting a stop 2 pips under 76 is too close. I need to be at least 5 pips under there. But just keep this in mind. If the entry does occur today, the entry will not occur at 30. It'll occur below 30 because moving averages move. Carlos is saying 80, a message from Carlos, and we know Carlos, by the way, before I say anything, Carlos has been killing it on Aussie. So respect credit where it's due, right? And is this a good potential resistance on the monthly, 87.35? Let me make it a monthly here. I mean, I could see it. This is my 94 here, but I could see it on the weekly pretty clearly. Because there's a lot of activity here. This would be decent resistance. It should definitely be a target at some point. This, I think, is even better resistance, but you know what? These are 600 pips away from each other. Maybe more. What I'm looking at is actually, yeah, around 8, maybe just under 87. Carlos is saying 87.35. I guess I'm a little more conservative. I'm thinking I want my target to be under that 87 round number. And this area, because, you know, support and resistance are areas, right? That's the way I look at it. And if I define that area, it's really an area between 86.25 and 89 and change. It's a big, wide area. But I would tend to say I want to get out a little bit lower than Carlos, but that's just because I'm a chicken. And I live to trade another day because I'm a chicken, you know. We all, listen, you got to be a risk manager, right? Carlos is not wrong, by the way. It's just my opinion. Carlos is saying 87.35. I'm probably 86.95 because I love to get out just ahead of round numbers. Carlos, man, you've been killing it, man. You don't have to defer to me. Okay? Now, and we love it when people in the class are killing it. Love it. Anyway, that's going to just about wrap this up. This is all based on copper. Keep an eye on copper, okay? This is a textbook breakout of an ascending triangle. And copper is right now higher than it's been since 2015, but it could go higher. It could go higher, and if it goes higher, it's probably taking Aussie with it. Keep an eye on China economic data. Keep an eye on China GDP projections. Keep an eye on China PMI numbers. This could end up being a monster trade. Okay. All right, gang. Thank you so much for listening. I appreciate your time and attention. My name is Ed Ponsi, your FX educator here on behalf of FX Street. Everybody have a fantastic day. I'll talk to you again tomorrow. Take care.